Good morning and welcome to the Killik and Co market update. This week has been the first full trading week of 2023 and markets have picked up very nicely so far. Yesterday we had the latest US inflation data which showed a further drop in inflation, down from an annualized 7.1% in November to 6.5% in December. So we've now got several months of US inflation data showing a clear downward trend. Although the commentary from the Federal Reserve is still suggesting that interest rates will continue to rise, the market is now pricing in a 93% chance that the next interest rate rise will only be 0.25%, which would make a very nice change from the string of 0.75% rises that we had last year, and it's likely that markets would respond very well to that. The latest GDP data for the UK came out this morning, showing that the UK economy grew by 0.1% in November. Not a great number, but much better than the 0.2% contraction that had been expected. It's thought that the number had been increased by people's spending in relation to the World Cup. Although consumers are clearly still willing to spend on some things, there is starting to be some clear evidence that consumers are nervous about making big financial decisions, and that was really evidenced in some trading updates that came out this week. First up, we had an update out from Barratt Developments, the house builder, which showed that there has been a clear drop in confidence in terms of people being willing to buy houses. Here's a quote from their trading update from this week. The first half of the financial year has, however, seen a marked slowdown in the UK housing market. Political and economic uncertainty impacted the first quarter. This was then compounded by rapid and significant changes in mortgage rates, which reduced affordability, homebuyer confidence and reservation activity through the second quarter. The outlook for the second half of the full year 23 is uncertain, with homebuyer confidence and the availability and competitive pricing of mortgages critical to the health of the UK housing market in the coming months. We then had an update from the recruiter Page Group, which mentioned a drop in confidence in both companies taking on employees and candidates accepting offers. In their update, they said that as the quarter progressed, conditions became increasingly challenging and we saw a reduction in both candidate and client confidence, leading to further delays in decision-making, as well as candidates being more reluctant to accept offers. Sentiment clearly has an impact on how much consumers are willing to spend, and therefore it has an impact on company revenues. It also has an impact on how much investors are willing to invest in the stock market, and therefore sentiment has a clear impact on stock market performance. So we would really like to see an improvement in sentiment over the coming months. Last week we talked about European natural gas prices falling, and the trend has very much continued into this week. Here's the 5-year chart again. You can see that prices started picking up in late 2021, peaking in the third quarter of 2022 before coming down sharply. Here's a 5-year chart for the MSCI World Index versus a European index, the Euro Stoxx 50. You can see the MSCI World in the green moved ahead after the COVID crash because it's got more tech. And although tech and the MSCI World then had a particularly bad 2022, the Euro Stoxx also had a bad 2022, largely due to the high European energy prices. From late 2022 onwards, however, the Euro Stoxx has really picked up and the gap between those two indices has narrowed considerably, likely due in part to these falling European energy prices. In this table, we've got the year-to-date performance of the MSCI World versus the share price performance of some companies who are users of European gas. You can see the MSCI World was up 4.1%, but the users of European gas have all outperformed as European energy prices have come down. Swiss chemicals company Sika was up 11.3%, utility company E.ON was up 7.8%, and residential real estate company Vonovia was up 23.1%. These companies are all covered by our research team, so do get in touch if you'd like to read the research notes. Moving on to have a look at next week, it's quite a big week for mining companies. We have got results out from Rio Tinto, Antofagasta and BHP. That's it from us. Enjoy the weekend and we'll see you next Friday.